Hi, my name is Oluwaseyi Adeosho from ARM Investment Managers, and I'll be taking you through the macroeconomic and financial market events for August 2022. According to data published by the National Bureau of Statistics, Nigeria's GDP grew by 3.54% in the second quarter of 2022. This is an improvement from the 3.11% recorded in the first quarter. The growth was largely driven by the non-oil sector, which expanded by 4.77%, albeit slower than the 6.08% recorded in the prior quarter. On the other hand, the oil sector contracted for the 9th consecutive quarter, declining to 11.77%. Headline inflation rose further by 105 basis points to 19.64% in July, making it the highest rate in 17 years. This was driven by increases in the food and core baskets. Food inflation accelerated to 22% due to the combination of security challenges in the food-producing regions, higher inputs, and associated logistics costs. Similarly, core inflation rose to 16.26%, driven by elevated energy prices, rising commodity prices, and weak currency. The local bourse suffered a loss for the third consecutive month in August, as investors' appetite for stocks remained low due to the expectations of sustained uptick in fixed income yields. Overall, the all-share index declined by 1.38% during the month, while the year-to-date performance moderated to 16.29%. Despite the negative sentiments that dominated market performance during the month, it is pertinent to highlight that corporates delivered very impressive first-half financial results. However, bearish performance of the market was driven by losses in large-cap stocks such as Bua Cement, Seplat, and Dangote Cement. Bearish sentiments in the fixed income market extended into August on the back of tight system liquidity and supported by high inflation numbers. The month began with weak demand amidst decent supply, as relatively fewer maturities hit the system, leading to further sell-offs of fixed income instruments. However, inflows from the Federal Asset Allocation Committee at the end of the month spurred buying interest mostly on short-tenured instruments. At the secondary market for bonds, the bearish sentiments resulted in short and medium-tenured instruments being relatively attractive, as average yields rose significantly by 116 basis points and 123 basis points respectively. Average yield on long-tenured instruments, however, rose at a slower pace by 72 basis points to 13.39%. Likewise, at the secondary market for treasury bills, yields advanced by 88 basis points to 7.79%. The August bond auction was oversubscribed by 22 billion naira, as average yields rose by 75 basis points to close at 13.33%. Following the bond auction, yields on the 2042s and 2045s extended beyond 14%, whilst short-end yields touched the 13% mark. Also, average stop rates at treasury bill auctions rose by 88 basis points to 5.49%. We expect market to trade sideways in September, as bargain hunting activities by investors trying to take advantage of attractive entry points would be matched by intermittent profit-taking activities. Although we see scope for banking tickers to deliver some decent gains due to the first half corporate action announcements, we think this will be capped by medium-term expectation on the direction of fixed income yields. We still expect domestic investors to remain dominant players in the market, as foreign portfolio investors would continue to demonstrate apathy towards Naira assets, and this is due to liquidity constraints in the FX market, increased political risk, and vulnerability of the economy to external shocks. Notwithstanding, we believe the muted activity of FPIs will be centered on dual-listed stocks as a vehicle to exit the domestic market. Barring any significant maturities in the coming months, we expect liquidity to remain tight, with demand and supply dynamics largely determining the extent of yields widening in the fixed income market. The high inflation rate and low level of liquidity are, however, expected to continue supporting yields at current levels. With global central banks' resolution to maintain their hawkish policy implementation in order to combat inflation, we expect the Monetary Policy Committee of the Central Bank to weigh the impact of rising inflation at its next meeting, the outcome of which will support their preference for price stability in line with global central banks. Now, a quick recap of what we've discussed so far. Nigeria's second quarter GDP signaled further expansion in the economy on the back of growth in the non-oil sector. Inflation maintained an upward trend with the highest figure in 17 years. The equities market recorded a loss for the third consecutive month in August, whilst fixed income yields were higher within the month. I hope you found this insightful. Should you have further questions or inquiries, please do not hesitate to contact your relationship managers or our customer care representatives. Remember, we remain invested in your tomorrow.